Happy Friday, traders. It is 8:02 a.m. Chicago time on the 6th of December, 2019. Hopefully you can hear me loud and clear. This is episode number 1653. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we had the jobs report, very, very important scheduled release, and big pop higher. The number came out pretty strong. There's an article, I believe it's on Bloomberg, saying that the growth report likely accelerated in November as former striking workers returned to General Motors payrolls, which would confirm that the economy will remain on a moderate expansion path despite a prolonged manufacturing slump. In either case, the report is pretty strong. The market pushed higher. The SOC, or the scene of the crime, or the point from which this release had interrupted the auction, the existing auction, is 3123.75. 3123.75. We're currently trading 3137, and that's where we stand. Across the board on equities, risk on. The Eurostoxx 50 leading the pack up 0.88%, 32 points, followed by the Russell up 0.83% from yesterday's settlement. NASDAQ up 0.78%, the Dow up 181 points, 0.65%, and the S&P up about 20 points, 0.63%. Gold is off, walking itself back down towards the most recent low. Gold's trading at $1,472.50, down $10.60 or 0.71%. Crude is hovering around $58.02. It is off 41 cents from yesterday's settlement, or 0.7%. Crude is weak. Even on the release, it popped higher and came right back off. That's where we stand this morning. What is left on the docket for today in terms of releases, now that the non-farm payrolls are out? Prelim Michigan sentiment is due to come out 30 minutes after the open. Expecting consensus is 97, forecast is 95.1. This can be a mover if it misses. Michigan final generally doesn't move as much, but Michigan sentiment prelim does. Let's shift gears here and look at what was expected yesterday, just in our kind of review / accountability portion. If you recall from yesterday, I talked about how the market tested below, tested down, and definitely tested below the 3111 and had held higher. And the most likely path is a pullback into the prior range and a push into 34. Well, yesterday couldn't get up there, but this morning it did. The 34 remains as a stock zone. As you can see, we spent a fair amount of time on the run up after the non-farm payrolls in this area before we broke higher into 39 this morning. But really, if you take a look at the auction, and I explained this, I went over this in depth yesterday. There was yesterday's session had a Trader Bite session had a 10-minute crash course on auction theory and how the market moves, at least from my perspective. Many ways to cut the market up and trade it. And I explained how these tests that end up failing back above really are likely to push higher, and that was why scenario 1 was designated that way. Here's what actually happened. We opened up just out of range, and we became responsive right away. We dropped right away. We dropped right away. But we ended up digging down a lot deeper. I expected this 11 area to do a better job holding, but it ended up pushing all the way down to 3.25, consolidating in the middle, We ended up with a triple distribution profile for a bit of the session, and then we finally ended up running back up into the close. The interesting thing about yesterday is the IB stat was never taken. This means that the market was completely limited or traded inside of the first hour's range. The IB stat says that around 98% historically, we've broken this yellow line. We've broken it by at least a tick. Historically, the yellow line is the initial balance, the first hour of active trading. So if you're in crude, it's 9 to 10 Eastern. If you're in the notes, it's 8:20 to 9:20, and so on and so forth. The expected action, and you can see this in the volume, the expected action is that most of the heaviest part of the day is going, in terms of business, is going to be done in the first hour. And yesterday, the S&P could not break that first hour's range. Very unusual. It falls under the 2%, 2 to 3% historically. So what does that tell us? It kind of tells us there's quite a bit of coiling inside of the prior day's range. Remember, the prior day had this very tight value area. We ended up trading within the prior day's range, expanding the value area. But we finished relatively strong. There's quite a bit of buying into the close that brought us back to the top end of the range, and so that set us up for an overnight session where we would likely squeeze higher, which we did. We opened back up and we immediately squeezed higher. That was kind of a no-brainer in terms of predicting that. The overnight inventory is 100% long. And the non-farm payrolls right here is the SOC. You can see how the non-farm payrolls extended what was a pretty tight range for much of the session after this spike up. The overnight session really was stuck between 31.2150 and 31.2650. A 5-point range, and we just broke out of there. It coiled up pretty good, and volume is also pretty good for the overnight session. Looks quite bullish. This is really hurting for the shorts. If you were here, you probably heard me go over this yesterday. One second. Sorry, I had to cough. That we pushed all-time highs, and we've been consolidating. And then we fell below 31.11 in a gap, and then we pushed back above and held this area. So more likely than not, we would squeeze into the flagpole here, into this thin portion of the profile. Remember, we're always looking to the left to see what tracks, what footprints, not delta footprint, but what footprints and tracks the prior auction has left behind. And to me, anything above 24 is likely to very quickly push into 42 and then 45. And that was the expectation, as I talked about yesterday. We are very, very likely to squeeze some shorts back up into 45 and then 55. And we're well on our way there today. So that's where we stand. The only caveat is the last pullback was higher. The last pullback was at 90.75. The current pullback was at 69.50. The market really dipped lower than it had for the month of November on the pullback. So, the key thing is, what does it do up here in the 42 to 45 region? Does it turn over and come back to 31.11? If it does, then 30.69 becomes vulnerable. Hope you can follow that narrative there. So that's how things are kind of shaking out. We had a consolidation day. Technically, I need to draw a micro composite on these 2 days. They overlap each other to see where the key figures are. I'm not going to do that because we're pushing against highs. It's not information I can use right away. So I'm going to leave that alone for now. What does the overnight session look like in order flow? Here's ctbookmap.pro. There's the non-farm. You can see that this is where I pull my SOC. I go right into Bookmap and look at what was the last print before the release. You can zoom in quite a bit, right? So we can zoom in quite a bit, and we see that right here, everything was nice and steady at 23.75 before the market dipped, and then we had really strong algo push up, pullback to that, and then continuation, and we've squeezed higher since then. Okay, what do we look like for overall depth? If you recall, yesterday I talked about 30.31 having some liquidity, 34.35 having some liquidity, and those would likely be areas of attraction on the way up. And we're actually getting that work done today. Again, we're heading towards 42. That's a pretty important test area, and then beyond there is the high before the drop at 45. But from an order flow perspective, a full depth perspective, looking up there, you could see there's a relatively decent offer up there at 42, and then we have a pretty strong offer at 47 up above. That sets us up for the 50, which is the mid-century figure, which is expected to have a fair amount of liquidity, and then from there it's 55, the all-time high. Below us, 29.75 is getting well bid, and then it's pretty free and clear beneath there. Let's jump back and look at what is expected for today, given how the market has traded so far. But I want to remind everyone that it is like Friday. Please take a moment to hit the like button if you're on YouTube. It may require you to log in order to do that. Just take the time to do that. If you're on Periscope, it's fine. But if you're on Twitter, hit that like button, please. And then also, again, I know I sound like a broken record, but I have to do this. I want to remind anyone who has not filled out the petition to go to ft71.com/MCL in capital letters. You have it in the description of this video. You have it in the live chat on YouTube right now, and you can see it in front of you, ft71.com/MCL. Please sign that petition. Next, let's take a look at what's expected for today. So, open auction, we're really tilted here. We're opening inside of a relatively decent sized area here. So I'm going to put up a composite that ties in this whole area from the gap. So let's clean this up and look at this area that we're in. Look at that profile. It is really a disastrous profile. Look at that thing. No consensus whatsoever. None. You have a high volume node there, high volume node, high volume node, high volume node, another high volume node, another high volume node, and another high volume node. This area is oops, screwed up that link. Let me fix it. Boom. This area here is just a trap of all kinds of, if you recall, when we were here trading here, it's a tough trade. I mean, it just goes up and down and up and down, up and down, and responding to news and so on. And we're heading into that area. So this is where we are, the base of which is 24.5, 23, 24.5. That's a decent base that ties in with the overnight point of control. and we just have these high volume, low volume zones all throughout. So caution up here. It is likely to be pretty choppy. There's incentive for both sides to participate here as relative value remains undiscovered. Okay. What am I expecting? I'm expecting an immediate push higher through the overnight high as the equities folks come in here, and I'm looking for it to balance out for a little bit, probably an early push that it turns into an open auction within the first 10 minutes, and then I'm looking for this to squeeze into 45, push into 52, 53, and squeeze the all-time high, which is well within reach at this point. We're trading at 39. It might dip to 35 or so before it pushes to 55. That's 20 points, a little bit stretched in terms of the daily range stat, but still within reach. The other scenario, which we've seen often, is that once the overnight session gets this big a gap, what we end up with is just a lot of sideways action that is quite confusing, and we end up with this balanced profile as the market rests up here as it's already priced in the good news, and there's nothing to do. Nobody's willing to buy at these prices near all-time highs, and those who got squeezed already are on the sidelines and not willing to sell. So we have a complete open auction. We have one of these tight, fat profiles, and then we go off on the weekend, and that's that. That's scenario 2, the second most likely. Scenario 3 is an open that pushes higher and then squeezes down so that we would get an impulse down. The gap zone top is 31.20.25, consolidates into 24 and then holds steady here and then just bounces back up and stays in the range. Now, these are all imaginary scenarios. These are all plans. What is the route? What is the route that we're likely to take today? That's what we're after. It is up to the market to confirm what it wants. But here's what I know. What I know is we're opening up again in that 42 to 45 area. I know from the profile over here that this is a pretty noisy area. Look at that profile. It's just all over the place. And so I know that there's likely to be a lot of turbulence. But if it breaks higher, I know that I need to pay attention to the 3150 area, then 3153, then 3155. That's really what I do draw these lines for. What happens if it pushes higher? Not that I want it to push higher. The second scenario, we squeeze through the 31.45 and a quarter, blast out some stops from that initial selling day. I mean, this day here clearly changed the tempo for this run up. So there's likely to be stops here for those that caught that short. So we blast out some stops, push into 45, 46, 46.50, and then we go down, drop off, and then just end up trading sideways between the 31.34 stock zone. We turn on the stock zone areas here, 31.34 stock zone and 31.46, and we end up going sideways. So I know that I got to see if it breaches above 46 or breaches below 34. Otherwise, it is a scalping day from the outside in, mean reversion type trade, which is fine. And in the third scenario, I know that if it tries to push into 45 and is unable after taking out the overnight high and starts to rotate down, and I see an impulse down, that I know I need to watch out for 24.25, 24.50, and then it's potentially going to tag 31.20. If it doesn't, it's likely to revert back to the opening swing, and so on and so forth. So that's how I'm looking at these. It's not I want the market to follow the line. This is my way of outlining the key battle zones. What's the terrain? And in this area, the terrain is quite rocky, quite turbulent, and is not in anyone's favor, so I expect some noise today. Good luck.